SI Financial. I'm glad you're here because we're seeing the markets selling off. And the question is, people are trying to stay cautiously optimistic, but are starting to worry about what ifs, and I'm hearing asset managers now talking about hard landing. So if it's not done by Memorial Day, it's a recession. You know, people are putting up some sort of ideas that are tough and that something needs to happen soon. What do you think needs to happen?
Well, there's two things that need to happen. You know, first of all, we need at least one domino to fall, someone to ink a trade deal with the U.S., and then everyone else will start to ink that deal because no one wants to be standing when the music stops. And then the other thing that needs to happen is we need to pass that reconciliation bill and the continuation of the current tax code. But my biggest fear when we're talking about taxes, they're actually talking about raising taxes. And in any way, shape, or form, that really goes against what Trump's promises were. And it brings me back to George Bush when he said, read my lips, no new taxes. And so if they raise taxes, I think that there could be issues there going forward. But those are the two things that really need to happen to give a little bit of certainty so that we don't have a recession and the market recovers.
And at what point do you start to say this is a buying opportunity for X, Y, or Z? What do you buy and when?
You know, we've been dollar cost averaging buying in over the last couple of weeks, albeit very little, but we have been cautious buying in. There's been some great opportunities all the way across the board, almost in every sector. But again, you know, you really want to make sure that you have enough cash on hand just in case we get another big dip. But if you're completely out and you're sitting cash on the sidelines, you're really missing the boat. When you look at what retail investors have done as compared to institutional investors, the retail investors have really come out ahead. And if you look at the amount of equity ETFs that have been bought, it's over $230 billion of inflows net this year. So a lot of people are still buying. I think it's a great buying opportunity all the way across the board, but you really do need to be cautious.
Here's the thing. As President Trump ramps up his rhetoric against Powell today, more so in the last few hours, I mean, now it's said that he's even exploring how to get Powell out of that lead role because Powell's tenure ends in May of 2026. Is it too much chaos for the markets? Like, does something just need to happen? Because if we start to hear that there's back and forth, it's like the market's not going to go higher, is it? Is it going to climb some wall of worry, or, you know, that our Fed chair is going to be ousted?
Nicole, I agree, because there's so much uncertainty. If that happens, it's just too much chaos. And really, when you look at what Powell did right before the election and when the economic data was stronger and he lowered rates, and now when economic data is weaker all the way across the board, it looks like we have negative GDP numbers, you know, for that first quarter. As far as employment numbers, all the economic data is showing a slowdown right now, and they really should be lowering rates. And if you look at the EU, they're lowering rates. They lowered it 0.25%. They're already talking about lowering it another 75 basis points before the end of the year. And it almost looks political, but I believe that he made such a big mistake, a faux pas, if you will, when he kept talking about inflation being transitory, and he was so late to the game on that he's afraid to make a mistake. And in reality, what's going to wind up happening is he's going to be late to this game as well, and he's going to be too late in lowering rates and could cause a recession, because we really need rates to lower for a couple of reasons. Not only for the economic growth, but we've got well over a third of the U.S. debt coming due in the next 18 months, and we can't afford to pay at this higher rate. So if he does not lower rates and lower rates soon, it is going to be a negative score on his legacy.
You know, here's the thing. I mean, there are some people who think between 1 and 5 rate cuts, and that we don't necessarily need a rate cut right now. You know, I don't know the answer, but I will say I know that people have come on and say you can't necessarily compare it to Europe or some of the other central banks. Europe's inflation is lower than ours. You know, there's 10 reasons why they need a rate cut more than we do. You know, but at the same time, we've seen Powell make some moves, and so he can't be late. I mean, it's going to be too little too late, especially people are also looking to the 2-year bond. at 375 and saying he's 50 basis points behind. I don't know if you use that as a parameter.
You're exactly right, and I agree completely. He's already behind the eight ball right now. I'm really shocked at his comments last week, but again, there's a credibility issue that he already has, and it's not he's not adding to his credit by slow rolling the rate cuts. I think it is going to be detrimental to the country. Again, I would like to see a quarter percent drop for no other reason really than for small business owners, because you really need to, in order to get the economy going, small businesses need loans to be able to grow. And until those rates get lower, we're just not going to see it happening. And again, even if they lower rates, at 50 basis points, a 0.5%, it could be a little bit too little, too late.
And, there are people in his favor that I will say, because I like to cover all sides, is that he really had orchestrated pretty much for all the tariff talk, a soft landing. Most people sort of saw soft landing. I mean, we stopped talking about hard landings and recession. It was looking like it was going to go pretty well, but now the playing field has changed, and he needs to take a closer look, people are saying. Ed Siddell, CEO, Chief Investment Advisor, EGSI Financial. Ed, thank you.